Anand Shah joins us, head PMS and represents ICICI Prudential EMC. Let's understand his thoughts and where markets are headed. Anand, good morning. Thank you for joining us. Let's start with your assessment of the market. November was all about despair. Now it's all about strength. What has changed in 15 days that the market mood has changed almost 180 degree?
Hi, Nikunj. Good morning, and it's a pleasure to be on your TV and talking to your viewers. I think, look, before I jump to what's changed in the last 15 days, I think most important aspect which I believe is changing is the T20 phase of the market, where there was excitement, there was gains on a very regular basis, and there was very little volatility in the markets. I think that phase is sort of behind us. And to give you a little bit of background, that phase was also because the earnings growth post-COVID, so 2020 to 2024, we have had a very strong earnings growth rate, which gave that much of a positive impact on the stock markets. There was deleveraging. The bank's NPAs recovery happened. The net NPAs are practically all-time low. So I think a lot of positives were there, which helped the market to do very well. I think we've reached a phase where we have softness in the economy, we have softness in the earnings growth rate, and the valuations are elevated. And to that extent, we should expect more volatility, more bouts of optimism and pessimism every now and then. And that's the background with which I would say, what's changed in last 15 days is obviously there was an incessant supply of paper, there was FI selling, all that sort of, compounded with a slowdown that we saw post September quarter results that came together. I think what's working is expectation of the capital expenditure recovery, both state, center, as well as private sector. And as it is, the consumption generally picks up in the second half, starting the festive season and now the wedding season. So the expectation is that the softness that we have seen in GDP numbers should bottom out and should start picking up. And that should reflect in earnings also being a little better than what they were in June and September.
Okay.
So where exactly then do you see the first signs of an earnings revival or uptick, if you will, come in, Anand, especially when it comes to the beaten down spaces, which is largely the consumption plays? That's where you've seen an aberration come by.
Yeah, so look, consumption was soft. The expectations were very high that there should be more money spent in the rural India, which should recover this, and that's not happened. I think as we see, we're still betting on revival of Capex cycle. I think because of general elections, there was general slowdown in ordering that should take off. Both center and state, many of state elections are also behind us now. So we should see impact of the government Capex as well as private sector Capex should pick up, and that should lead the recovery. Is that said, consumption, as I said, there is a natural second half being better than first half. That should play out. So consumption should recover on its own, given the festive seasons and the wedding season comes through in the second half of the year.
Okay. You've used wedding season 3 times in last 2 answers. कितनी शादी attend करी है?
No, so in India...
No, I'm asking about you. I mean, you've been
more than
using,
how many traffic jams, for how many hours have you been stuck on the roads? That's a more pertinent question.
Every answer at wedding season. तो कितना शादी?
No, I'm just talking of consumption being naturally better in second half than the first half. And that starts with the Ganesh Chaturthi.
Okay. The other theme for the market has been government capex, which has slowed down, and there is a belief that the government capex will come back. Is there a reality? Is there a fact that government capex will come back, or government capex will disappoint us? Because government capex is not easy. I mean, there's a process, there's a timeline which actually needs to be executed.
Indeed, and I think government capex has been very strong. And to that extent, it's sitting on a very high base. And to that extent, to continue to grow and continue to sustain and at a faster pace from here would be a challenge. I think what we are more optimistic about if at all, and we are hopeful of, is the private sector capex. I think that's something which there's a lot of room to do that. If you see the balance sheets of the India Inc., there has been a strong deleveraging. So the ability of corporate to do capex is definitely there. If you look at the bank's balance sheet, if you look at the quality of assets, the NPAs have been at all-time low. That also augurs very well for banks' ability to fund the private sector capex. So I think I agree with you to some extent that the government capex is already there. It can do a little bit more. What can really change in the overall capex scheme of things is the private sector capex, which is fairly benign compared to what it used to be in the previous cycle of 2004 to 2007. So I think there we can see an uptick.
Let's also look at IT. Infosys has hit an all-time high. I'll say it again. Infosys has hit an all-time high. But this is one sector where earnings are very moderate. Best case scenario, 10%. That's the best case scenario. But why is this sector, or why some of these stocks are making all-time high when the growth is not explosive? The growth is still patchy.
I think we are also struggling with that question, but nevertheless, let me try and answer that. I think the key is we have had very strong domestic flows, and there's some bit of revival in FI flows. When you see macro, I think there are challenges in domestic markets, there are challenges in international markets. In light of that, IT sector actually offers whatever growth it offers is actually still better than what we are getting in the broader market. But I think the more important point as far as IT sector is concerned is a strong return on equities, strong cash flows, and most importantly, they've been sort of returning most of the cash flow that they're generating. So they're not taking in more capital to grow this. And to that extent, they're very, very capital efficient. And with this much growth also, there is investors which are backing that sector.
Where are you on this entire consumer tech and fintech space? 2 years ago, they were in a disarray. Now they are the new sunrise sectors. Zomato has become part of Nifty 50. A lot of these stocks have come into FNO. So from a scary shock in 2022 versus strong comeback, that's been the story for a Zomato, Policy Bazaar, I mean a whole host of them. As a house, what is your view? You think there's money to be made here?
I think we have entered the phase where nobody has answers. I think for a lot of us, we would have believed that either you can get a value or you can get a convenience, and you can't get both when it comes to grocery purchase. I think that's the paradigm which is changing. More recently, I think there is a blurring of lines between the retailer who provides value and the retailer which will provide quick commerce. Today, we are, I think, and I believe we are entering a phase where the value retailers are upping their game in terms of providing convenience to the consumers, and definitely the quick commerce or the retailers which are providing convenience are upping their game on the value side, where they're offering sweet discounts also. So I think this market is now wide open, and we have multiple players which has got money, they've got balance sheet, or they are owned by the houses which have a lot of capital which they can put behind if the idea is right. And to that extent, I think where we are headed towards in this sector is actually the pain. Consumer will be very happy. Consumer will have both convenience and value together. And what we would see is there will be a race to capture that consumer which is embracing this. But in the meanwhile, there should be a lot of pain as far as cash burns are concerned. And to that extent, we'll have to today try and identify who are the winners who have got the game right, and then be in it either during this phase or during the correction phase, which we believe would be there.
Space which has really been doing well of late is the market-related themes, right? I mean, everything from a BSE to a CDSL to an Angel One. And, interestingly, these stocks always move in a herd and very big moves at that. Do you think it's pretty much in sync with the market recovery?
I think we are very clear that as India becomes upper middle class and rich, the services will gain over products. And one of the big consumption element as far as the Indian middle class, upper middle class and rich would be the financial services. And the names you're talking about, very clearly you have seen over the last 4 years, Indians have embraced equity, Indians have embraced mutual funds, and even portfolio management services. And very clearly, that's the part. You're seeing volumes exploding as far as stock exchanges are concerned. So very clearly, this is now wide open. The penetration is yet to happen fully. And as the per capita income moves up, as prosperity moves up, you'll have more and more cohorts of population which will join the bandwagon. And that's one expectation which is driving all this. And in line of that, we are also believing that as India becomes richer, it will consume more of quick commerce, it will consume more of airline services, travels, and even restaurants in that sense. That's why I'm saying that very clearly the incremental money spent by the Indian households would be more in services than in products.
Right. Okay, Anand, great to have you on the show. Thank you so much for your time today.
If you like this video, then like, share and subscribe to ET Now.